Hey guys, welcome back to a brand new video. I'm RexFinance, and in today's video, I'm getting back into the very popular series on this YouTube channel where we cover 3 stocks to buy in the upcoming months. Obviously, I'm not a financial advisor, so please do your own research and form your own opinions on these companies I'm about to present on today. But in my personal opinion, I believe that these 3 stocks over the next month and over the long term are going to perform very, very well. That's something that if you guys are new here, you need to learn about me. I really don't care what happens over the coming 30 days, but over the long term, I believe all of my stock picks are going to perform very, very well. However, what we like to do with this series is go back and look at last month's picks and see how we performed over the last 30 days. Again, I don't really care how we performed, but it's just fun to look back on it. So without further ado, if you guys are new here or returning and not yet subscribed, please hit that subscribe button down below. Also, if you guys enjoy this type of content, hit that like button for me and let me know down in the comment section below what stocks you plan on buying in the month of September. Without further ado, let's go ahead and get into this. As you can see on the screen right now, my first stock pick for the month of August was a company called ASTS Mobile, ticker symbol ASTS. At the time of this recording, the stock was trading at around $11.28. Over the last month, it's kind of been up and down, but over the long term, I still believe it's a great company to own. But over the last month in particular, ASTS stock is up about 9%. So that's a pretty big win. Anytime you can return 9% to your portfolio over a 1-month time span, you're doing pretty dang well. So I'll consider that first pick of the month of August to be a major success. Let's get into stock pick number 2 that I had for the month of August. This stock pick was a major winner for us over the last month. Ticker symbol GNOG, Golden Nugget Online Gaming. If you guys are unfamiliar with the story, it was just announced that Golden Nugget Online Gaming was being purchased by DraftKings at a major premium to the share price. And the reason I included Golden Nugget in last month's picks is because I felt that the valuation was very unfair for the company. Lo and behold, a bigger player comes in and pays a massive premium for this company. That's something you always want to look for as an investor, is opportunities with stocks that are majorly undervalued. This is a prime example of why. Not only can you return massive gains to your portfolio if you identify these types of targets, but these companies, if they truly are undervalued, have a high likelihood of actually being bought out, which is exactly what happened in this case. So, what happened to the share price over the past month? Well, as I've already stated, it was a major success for us, with Golden Nugget Online Gaming up 87% over the past month. I would go challenge you guys to find another YouTuber out there that had better return on a stock pick for a month than this pick for the month of August. It was pretty ridiculous, but as I've already mentioned, I really don't care what the stock price did over the last 30 days. I was in Golden Nugget Online Gaming because I saw it as a great opportunity for a long-term investment. However, now they're going to be bought out, which means their stock won't be publicly traded anymore. It just so happened that we had such great return on this stock pick. So, moving forward, let's get into stock pick number 3 that I had for the month of August. Stock pick number 3 was a bit of a dud. We had CleanSpark, ticker symbol CLSK. And as you can see on the screen, the stock only returned 1.62% over the past month. Now, if you annualize that and you see that you would return over like 12-15%, somewhere in that range throughout a whole entire year, if the stock price continued to perform this way, it's definitely nothing to complain about. But in relation to the 87% that we got with Golden Nugget Online Gaming and the 8% we got with ASTS Mobile, it really is kind of a dud for the month of August. But you know, it was still green, so we went 3 for 3 yet again on our monthly stock picks for the month of August. I'm going to do my best to do the same thing for the month of September, so let's go ahead and get into what you guys have been waiting for. My first stock pick for the month of September is one called Fubo TV. There's a high likelihood that many of you that are watching this video have heard of this company before. They're basically revolutionizing the TV market, the television market. They're cutting the cord, but they're also implementing sports betting on top of this. So they are being very innovative, which, if you guys are fans of Cathie Wood, it's exactly what she looks for. It's exactly what I look for, is growth companies that are innovating and being disruptive. And that is an exact description of Fubo TV. I have never personally owned this stock in the past, but over the course of September, if we get any dips in this share price, I'm going to be loading the boat. Obviously, you can see today they're having a great day after they got some really good news. The stock is up over 5% today on the news that they received approval to offer online sports wagering from the Iowa Racing and Gaming Commission. So they're going to be able to offer online sports wagering, which is a big part of their business model and a big part of the way they are disruptive in the industry. They got approval from Iowa. And this is just going to continue to take place, in my personal opinion. More and more states giving them approval. Their revenue growth rates are incredible. And honestly, the current valuation of just about $4 billion is pretty disrespectful for this company, in my personal opinion, if the management team continues to execute and the company ends up becoming what so many of us believe it will become. If we do a quick dive into the financials here, we can see that they're growing revenues at a rate that not many companies can match. They grew their quarterly revenue year over year by almost 200%. They've brought in almost $500 million in revenue over the trailing 12 months. This revenue growth is just going to continue as more and more states give Fubo TV approval. Obviously, we are also approaching sports season, which is going to be very, very big for Fubo TV. Scrolling down, we can see that they have plenty of cash in relation to their debt, meaning that there is really no risk that this company goes bankrupt at this point, especially as over the coming years, they start to turn a profit. That is the key story with this company. We need the company to start turning a profit, but that's also the story for any other innovative growth company out there practically. So I have no doubt that over the long term, Fubo TV is probably going to be a very, very good investment. I could honestly also see this company eventually paying a dividend many years down the road. So I think Fubo TV could have a great month of September as the rotation back to innovation comes, but I also believe that this is a great long-term hold. Let me know down in the comment section below whether you are invested in Fubo TV already or not, or if you plan on doing so soon. Alright, moving along for the sake of time, stock pick number 2 for the month of September is Lordstown Motors. Some of you watching this video probably are shaking your head when you hear me say that, but there's a very big reason why I think this is going to be a great pick for the month of September. The reason for that is that Lordstown Motors has always stuck to a production target date of the end of September. Obviously, September is finally here. The stock will likely boom if they do in fact execute on that plan to start limited production towards the end of this month. That is going to be big for the share price if they can prove that. However, if Lordstown Motors does delay this, that could hurt the share price even more. But when I look at this company trading at $6.50 right now, it's hard for me not to want to take a little bit of a gamble on this play. I'm not really sure about the long-term prospects of investing in this business model just because they have so much to prove as a company. For instance, is their endurance pickup truck gonna be a good pickup truck? We have no idea. We have no idea its functionalities. We have no idea what the demand is for the pickup truck. In addition to this, the company's going to be operating at a net loss for many, many years as they continue to scale up their production and deliveries. That obviously is not very good with the share price being depressed so far down. The reason for that is if the company wants to raise funds, it's really going to hurt shareholders if they want to dilute the share price. It gets to be a certain point with any stock in the stock market that if their share price goes down far enough, dilution is pointless and it's almost bad for the company because they're giving away equity of their company for such a low valuation. So those are just a couple of the many question marks with this company, but it's hard for me not to want to take a little bit of a risk here, seeing that the stock price is trading at $6.50 and production could be starting this September. The reason that's a big deal is because there's no other electric pickup truck out there that has started production. Lordstown still has a chance to be the first to hit the production line with their electric pickup truck. If it happens, I've said it already, that's going to be big for the share price. Obviously, over the last 6 months, it's been pretty painful to be a Lordstown Motors shareholder, down 67%. Over the 1 year, it's not much better, down over 60%. So, in relation to where we were trading at our highs of over $30 per share, again, I want to take a risk on this, and I think it's going to be a good winner for us in the month of September, but it practically all lies on whether or not they actually start production in late September. Right now, the company has $1 billion market cap on it, obviously pretty undervalued if they become the company they want to become. So it could be, keyword could, be a good investment for the long term, but there's a lot of question marks and what ifs involved with it. If we go look at the financials, obviously they are not bringing in any revenue. I've also already stated that they are operating at a net loss and will continue to do so for many years to come. If we look at the numbers that different analysts have for Lordstown Motors, we can see that they have them doing over $1 billion in revenue in 2022, next year. Obviously, with a market cap of just $1 billion, the share price would go up if they hit those analyst targets. If, I keep saying if or could, all these different words. So there's a lot of risk here. I'm wasting a lot of time explaining this. I think you guys get the point. but I think it's a good opportunity to take a little bit of a risk here, and I think I'm going to do so in the month of September, especially if the share price stays below the $8 range, $7 range, somewhere in there. But without wasting any more time, let's go ahead and get into the final stock pick for today. Stock pick number 3 is actually one that I've talked about a long time ago. I actually used to own a pretty decent stake in this company as well before selling out around $20 a share, which just so happened to be about its 52-week high, so I timed that out pretty dang well. This company, Flux Power, ticker symbol FLUX, manufactures lithium-ion batteries for lift trucks and forklifts and all of that sort of stuff. They also manufacture batteries for ground support equipment at airports, for warehouse robotics, and also electric vehicle charging stations. They actually have a partnership signed with Beam Global to provide batteries for their electric vehicle charging stations. So it's kind of cool everything that this company is into right now. However, it's the same story as a lot of these other stocks. Over the last 6 months, it hasn't been pretty for this company, down 37% from its highs at around $20 a share, as I've already stated. Year to date, it's even worse, with the stock down 46%. However, if we go to the 1-year chart, we can see that the stock price has performed really well. When I first bought into this stock and brought this company to the YouTube channel, it was right around $5 a share if I recall correctly. So if any of you bought in back then, you're still pretty dang green on that position, which is kind of crazy to think about. However, I think this is such a great opportunity because of the way the management team has transformed this business model. When I first bought into this company, I made it clear on my YouTube channel that it was very risky. They had mountains of debt, they had horrible margins, but both those things have been drastically improved since I last checked in with this company. Their debt is almost non-existent, and their margins keep on improving. And this company is going to be a very profitable company going forward. Also, what I like about this company is the way they consistently grow their revenues. It's not a company that's growing their revenues at triple-digit percentages year over year, but they are growing their quarterly revenues year over year by 40%, which still is hard to beat. And this has been a consistent figure. This revenue number has consistently gone up and up and up and up, signaling that the customers they have are sticking with them, but they're also likely increasing the orders they're putting in for Flux Power. Also, when we look at these numbers, it's easy to tell that the customer base is growing for the company. All those things are great to see. So let's look at the debt. When I first invested in this company had over $10 million in debt easily. I can't remember the exact figure, and the cash on hand was pretty poor. It was very risky. But if we look at this, they have plenty of cash. Their debt still outweighs that cash. So they have some more work to do, but overall, the direction that this management team has taken the company is very bullish, and it's very good. The margins keep improving, as I've already stated, and if we look at what analysts have for this company going forward, we can see that they have them doing about $35 million in revenue next year. I think it's likely they'll actually beat that 34 million number, just given the fact that they did 25 million over the trailing 12 months already. And I think that 30 to 40% revenue growth number year over year is probably going to continue. Now, if we look at where the profitability of this company is going to be over the next year, we can see that analysts still have them operating at a loss. I honestly think that the company's probably going to operate at a loss next year, but I think analysts are being a little bit too bearish on their figure of negative 82 cents EPS for next year. I think that EPS number is going to be much closer to break even than negative 82 cents per share. The reason I think this is because, as I've already mentioned, the company has improved their margins significantly since I first invested in the company. We can see that in September of 2020, they reported negative 42 cents earnings per share. In December, they reported negative 29 cents earnings per share. And then just a few months ago in March, they reported negative 14 cents earnings per share. So if this trend continues, I think it's likely that the company's going to be closer to break even than negative 82 cents earnings per share. But that's just my personal hunch. I do think that the margins are going to continue to improve for the company, but we'll just have to see what happens over time. The current valuation on this company is about $100 million. So when we look at the revenue that this company is probably going to bring in next year, conservatively at about $30 million in revenue, the valuation is still pretty undervalued for this company given the industry they're in with battery manufacturing. We all know where battery manufacturing is going to go over the next decade. It's going to go through the roof. So I can't wait to see what happens with Flux Power and what the management team continues to do to expand their existing business segments. With that, guys, again, let me know down in the comment section below what stocks you plan on buying this month in September. I covered Flux Power, ticker symbol FLUX. I also covered Lordstown Motors, ticker symbol RIDE. And finally, I covered Fubo TV, ticker symbol FUBO. I think and I hope that the month of September will be very kind to all three of these stocks, but I also believe that all three of these companies are going to be great companies to be invested in over the long term. If you guys enjoyed this video, feel free to hit that like button down below. It really helps out the YouTube channel. And with that, I'll be back with a brand new video later this week. Peace out.